Hey there, traders. How are you? It is that time again. That time of the week where we get to do one of my favorite things, and that's backtest your stocks. Not my stocks. I want to backtest your stocks. But I need your help. I need you in the chat box right now to put in two things. I need you to put in number one, what was the best stock that you traded this week? The one where you're like, oh yeah, I killed it. I'm bragging about it. I'm telling all my friends, hey, you got to go buy this stock. But I also want you to put in the chat the stock that took your lunch money, right? The one where you're like, oh, I'm not going to tell anybody I traded that one. No. That one I keep secret. The other one, I'm going to tell everybody. But this one, no. So do me a favor. In the chat box, drop those two stocks, and then let's get busy.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell.
Well, hey there, traders. My name is Christopher Ewell, and my website is 10MinuteStockTrader.com, where we show traders how to take the guesswork out of trading in only 10 minutes a day. So thank you for letting me come on the Benzinga channel. Thank you, Benzinga, for the opportunity to come and chat with your fellow teammates here. Now let's take a look at the market. Click the right button here. Bam. Now, I got to tell you something for real. All right. And that is this market can't decide which way it's going to go. I'm sure that you are also thinking that same thing, right? Not all that long ago, we were trading sideways in this range here that I got highlighted here on the screen, this blue range here. And then it got monkey hammered, as you know, went down over 12% top to bottom. But it's almost like it didn't even matter. And we've taken up most of that slack, right? We're up basically 10% off the lows in the last week, okay? That reminds me somewhat of ARK, ARKK, that had a 20% bounce from its lows, over 20% bounce, right? It's crazy what's going on in this market. This is a market for very agile, very risk-tolerant traders, right? If you're going to trade, you need to be aware of your risk, especially in this kind of market. So let's do this. I can already see people blowing up the chat, and I want to say hi to everybody who's in the chat. Igor Bogdanov. Pump it. They pumped it over to Google. Yeah, I saw that. Look, from what I understand, I don't know if this is real or not. It's just what I've heard on the internet. And you know, the internet never lies. Like, I know that that's your actual face and name. I heard that Nancy Pelosi bought boatloads of Google call options, and then this happened. I don't know. I'm just relaying the rumors on the internet. I don't know. BNZB Trading says Mitch earnings and SPLK took some. All right. Good. Igor also said PayPal hurt you. Woo. You know what, Igor? I think we'll spend a little time on PayPal today, because what you said right there is so incredibly critical, and it definitely ties into today's final thoughts. I thought a 50% correction was the bottom. Dude, here's the thing, right? We have no idea what the bottom's going to be. But we do know one thing. If the price is going down, until that price changes, that's the trend. So we can talk more about that, man. I appreciate it very much. Isaac is here all the way from Alaska. Isaac is one of my 10-minute stock traders. I am so glad, Isaac, that you made it here. You rock, dude. Made some back in SPLK today. All right, good. Tiny Pie Media. Every week you're so nice to me. Qs are tanking. Are they? I mean, they're down from what they were like a few minutes ago. I wouldn't call it tanking. But yeah, who knows? Who missed earnings? I don't even know. You tell me. You guys tell me in the chat who missed earnings. Chop 2022. Yeah, for sure. You know, we had that monster run. Let me pull up the chart here. We had that monster run in SPY where it doubled, like actually doubled from the COVID low. Hang on, keep dragging. There we go. Doubled from the COVID low over the span of about a year. And now we're in like chop fest, right? By the way, if you are a student of the markets, you might have heard about the Dow theory. Okay. The Dow theory is that the market goes through 4 phases. One phase is where the market's trending sideways, or phase one. Phase two is a monster growth phase, which would be this, right? Phase three is also a topping phase. And phase four is where it goes down. I'm not saying we're looking at phase four, but I am saying when you see moving averages crossing all over like that, that's an indication of it. Isaac says, yeah, those PayPal earnings, no bueno. Let's talk about PayPal. So here's something I teach all my 10-minute traders, right? If a stock is below its 200-day moving average, the only direction you trade it is short. I don't trade earnings, but if I were to trade it, the only way I would have traded it is short. Its 200-day is way up here at 246, right? Before earnings, it was $80 below its 200-day moving average. I mean, if you take nothing away from anything that we've ever had a chance to talk about, and I appreciate the opportunity to talk to you. If you never take anything away, take away one thing. You put one moving average on your chart, the 200-day moving average. Just that will keep you out of trouble, right? When it breaks through the 200-day, mathematically, it can crash. Okay? But if you get out before it hits the 200-day, mathematically, you're not going to see that crash. So yeah, PayPal did get wrecked. Spotify's down 15% after earnings. Geez, I'm gonna have to go buy some more premium subscriptions there. Facebook, change your damn ticker. No, keep it at Facebook forever. That's what I say. Look at Facebook. Ouch, Facebook and Spot. BIIB. Facebook missed. UPST didn't do me any favors. Igor says, here we go again. Facebook over a 2 standard deviation move. Jay, I appreciate your discussion there. It's down 17%. Yeah. Yikes. I appreciate your discussion on standard deviation moves. I will say, if you believe in that style of trading, which I did for years, if you believe in that style of trading, there's a good chance that you might run into issues where you have a situation like this. If you're telling me it's a 2 standard deviation move, who set those deviations? Okay. What I can tell you is it's below its 200-day, which means it's an bearish trend. And to see it go down 17% while it's under its 200-day almost isn't surprising, right? Keep in mind, nothing. Write this down, Jay. I got you. Ready? Nothing good happens under the 200-day moving average. It's just what it is. Frank says, let's get meta at 220. Yeah, okay. Amazon's getting hit. And Jay says, agree. Awesome, man. I appreciate you guys. All right. So we've talked about our market sentiment. Stonebridge Advisors. I don't think they advise in Facebook. I'm just saying. I don't think that they advise Facebook. You guys are killing it on the chat. Let's do this. I am about ready to start taking your audience requests for backtesting. Are you ready? So I'm going to keep this super, super simple. I'm going to clean up my charts as well so we can all be on the same page here. We're going to do a strategy. So it's trend following, of course. That's the only way, in my opinion, you can trade. It's trend following, and we will be using the 10-day exponential moving average as the trend line that we are following, okay? So imagine if it breaks over the blue line, we get in. If it breaks under the line, we get out. In a nutshell, that's exactly what the strategy would be doing, okay? And when we do that, let's go set it up here. We're going to say add a parameter, condition, price. Let me make this bigger so you can follow along. Close, greater than, indicator, exponential moving average, 10. All right. Now we're going to add a script. I'm going to take off that banner there. Hey, Mitch, can you hide that? There we go. I got it. We're going to add a parameter of condition for the exit side, price, close, less than, indicator, exponential moving average, 10. All right. So what we just did is we just wrote a tiny bit of code, which is super easy. By the way, this platform I use is called TrendSpider. I love it. It's amazing. It's one of the biggest tools I've ever come across. The most amazing things I've ever seen. And you'll see why as we can backtest all stocks in about 4 seconds each. If you like this and you want to use it, you can sign up for TrendSpider. Use the code 10minute. That's 10minute. You'll get at least 30% off. And if they are running any sort of special, it will match that special price as well. So that's my shameless plug here for TrendSpider. I am not an owner or an investor in it. I just love using it. Okay, so we're going to hit run, and we are currently on Facebook/Meta platforms here. And we can see that this strategy does not perform well in Facebook. Negative 1.34%. Well, hang on, let me change this. I like to also do 1,000 candles. If you just do chart, it'll do 1 year. If you do 1,000 candles, that's basically 4 years of data. It's not going to go back all the way to 1987, right? Where you may not have even been born yet, but why in the world are we looking at a back test from that point, right? We want to know what's new, what's recent, what actually matters. And so 1,000 candles gives us about 4 years of data. Now, like I said, this strategy doesn't work great in Facebook. It's down negative 22%. But as we go through, this allows us to see the projection, if it is still a valid backtest, and it gives us some historical results. Let's see. Isaac, yes, we can absolutely do bearish backtests. If you guys are looking at a bearish backtest, please specify that inside of your comments there, because I won't know. We're going to assume that we're going to go long on everything. All right, so let's start at the top with MTCH. All right, MTCH. Now, when I go to this, it's going to automatically update, and we will see that following this strategy would yield a 6% return, while the stock over the last 1,000 candles has moved about 6% as well. So this one's on par, okay? But also, it keeps you out of all these ugly down moves, right? You exit here, and you try this again, and you try it again, and sometimes you just stay out. But other times, I'm just going to scroll over. I don't know the stock at all. You'll catch a 10% move like that. You'll catch another 10% move like that. So yeah, that's what I see in MTCH. Now let's look at SPLK. Splunk. All right, so 63% return following the 10-day exponential moving average. While the stock is up 39% over the last 1,000 candles, this strategy has outperformed that by about half. Another half, right? Like 1.5 times. So 63% return on this. Yeah, great one there. I appreciate that. All right, let's look at PayPal. Igor and Isaac both talked about it here. So this is a 30% return cumulatively. Now remember, we have no control of what the stock does, okay? So this has an 88% return over the last 1,000 candles. We can't control that. We can only control a strategy if we were to follow an entry and exit point like this, right? 30% return. But look at this, right? It kept you out of this big ugly move, right? Exit at this point from there to there, and that's a 27% decline. If you follow the strategy, you didn't stress, you were out. And then over the last few weeks or so, this has been out of that strategy since January 13th. So yeah, if you followed this strategy, bam, you'd have missed that, and no stress there. Now, this does actually show, because it hasn't had time to update here, the back test. And as you can see, hey, look, the back test does show to be pretty strong, but following that, nah, got murdered. Isaac was asking Igor a question. Chop 2022, that's right. Okay, let's look at Spotify. Spotify is down 22% on earnings. Yikes. By the way, let's throw our 200-day on there just for fun. Would you look at that? Let's throw our 200-day on there just for fun. Now, we're not throwing the 200 in the back test here, okay? So keep that in mind. We're only doing above or below the 10-day moving average. But yeah, that's ugly. 22% down on that. But the backtest shows 121%. Sorry, I got lost in the 22% down move there. 121% following this strategy versus only 23% if you were to go long on it over the last, since it was IPO'd back in 2018. So, hey, I hope you find this useful. If you do find this useful, do me a favor, smash the like button, right? I am so grateful to be able to do this here with you guys on Benzinga. And if you like this, smash like and let Benzinga know that you like it as well. I'd love to be able to help you guys out. Okay, let's look at BIB. Biogen Inc. All right, so this one, check this out, right? Negative 27% on the stock in the last 1,000 candles. And negative 57% on the back test here. Man, we're coming up with some crap back tests today, I tell you what. But that's part of the game, right? If you aren't taking into account the data, right? Past performance is not indicative of future results, but history does rhyme, okay? So if you can see, hey, my strategy following a 10-day, my strategy following a 20-day, my strategy following whatever you choose yields this result, then you can trade with confidence. It doesn't mean you're going to be guaranteed a winner, but it does give you some confidence to say, hey, this strategy looks pretty sharp. Let's go back to the charts here. All right, Money Mitch says, I got a hard stop right at 4:29 Eastern time today for the Spotify earnings call, which is going to be pretty great. Make sure you guys stick around for that. UPST didn't do me any favors. Now, Upstart. Yeah. So maybe you were following this one with my friend Mark Minervini. I love Mark. Mark and I are good friends. He this is when he was on TV and they asked him, hey, what does Upstart do? And he's like, oh, sorry, can't hear you. Got to go buy it. But yeah, I mean, it had a monster rocket move and then a monster rocket move back the other way. If you followed this strategy, you would have made 559% return. Plus these ugly, nasty, nasty down moves here, 53% down move, followed by another 40% down move. Oh my gosh. That's ugly, ugly. You'd have missed all of it. You would have missed all of it following just a simple line, right? Think about it this way, right? Hang on. I'm going to do my best impression of a YouTube ad. You ready? Follow this one simple line and you're going to get a 559% return. Isn't that amazing? Right. There you go. Yeah, exactly. That's exactly what this shows. Crazy to think about, but that's exactly what it shows. All right. Looking on the charts, Jay is talking about Amazon. Amazon after hours down 3%. Nothing like the other stuff that's getting martyred today. But let's look at this. So, wow. So this is really interesting, right? Obviously, this is not the best strategy for Amazon. Amazon itself is up 120% over the last 1,000 candles. But the strategy is only up 6. So if you were a smart trader, you would come in here and you'd say, okay, well, if that doesn't work, what if we change this to the 20-day? What if we change this to the 20-day? What does that tell me then? Run. 3%. Still not really performing very well. You say, okay. Well, that's all right. Well, what if we do the 5-day, right? Let's see if the 5-day does anything for us. 37%. Okay. Just by changing a couple variables, you can get a completely different outcome, a totally different picture here. So while I'm using the 10 is just an example. It's where I start, honestly. I start everything on the 10. And if it doesn't work, you just adjust. Let's see. Jay says the Q100 or the Qs just lost their 200-day on this. Did they? Let's take a look at the 200-day. Yeah, for sure. But it's been like fighting this 200-day moving average, and same thing with the SPY, right? It was below and now it's back above. The Qs have been really, really hit hard. How hard were the Qs hit? Top to bottom, down 16%, 17%, something like that. It's quite a lot. Yeah, you got to be careful. You got to remember, above everything, risk is paramount. As you know, as I always talk about every week, week in and week out, day in and day out, keep your risk in check. That matters more than anything. All right, in just a few minutes, will need to run, but I do have a couple things that I want to talk about here real quick. So if you are enjoying this, do me a favor. In your YouTube search bar, I want you to go over and type in the words 10-minute stock trader. And when you do, I'm pulling it up here. When you do, you're going to see my smiling face smiling right back at you. Maybe if you don't mind, come check us out. We have over 3 million downloads at this point. Over 10,000 of our friends, just like you guys who come and subscribe, and we put up new videos 3 days a week. So I'll be glad to help you out there. But let's do this. I have just a couple more minutes. I'm going to look at two more. Then we'll go to our final thoughts here. USAP, Universal Stainless and Alloy Products. Doesn't that sound like a boring company? But check it out. You know, it's not boring. This 38% return on the backtest, while the stock is down 61%. That right there is why we do the backtesting, right? You think about it, negative 61 to positive, let's round it, okay? Negative 60 to positive 40, that's 100 percentage points difference. 100 percentage points difference just by running this backtest here. And Isaac is going to end the day, UNP. Isaac, I really appreciate you, man. All right, UNP, 78% return. 78% return. 91% cumulative in the last 1,000 candles, but we can't control that. What we can control is our entry and our exit points. If you follow this strategy, 78% return. Now, this is a valid backtest right now because of that. That's why it shows going out in the future. So yeah, I love this one, Isaac. Nice choice here. All right, let's go to our final thoughts of the day. All right, so this goes back to the PayPal, okay? And we talked earlier about the 200-day. If you take nothing away from the 200-day, check this out, right? So this comes from my friend Mark. I mentioned him a minute ago. I love Mark. This is a chart of Robinhood, okay? And he went through and he kind of added some commentary to what a lot of people are thinking as the stock has been moving, right? You get in here, let's call it 45. Hey, it's a great opportunity. I thought I was going to miss this. Thank God I got another chance to buy it at half price. Nah, it's kind of traded sideways, and it's this great spot to double up. The bottom's in. It's going to go up at this point. And as it comes down, I don't understand. My research says this thing is undervalued. How many times have you said that, right? It should have exploded on earnings. Should have. It should be a word you'd never say in trading. I'm not selling. I have diamond hands. Do me a favor. At this point, from this point forward, never say you have diamond hands. Don't do it. And then here at this point where it's down to $30, F this. This is nuts. It's shaking out all the chicken hands, right? I know I'll be right eventually. Next down under $20. What the F? This is ridiculous. How much F and lower can it go? And now we're looking at $10, $11 here. I don't know. Maybe I'm wrong. I hope that this is not the case for you guys out there. Surely not. As Benzingers, you guys know how to control your risk, but a lot of people don't know how to control their risk. Because they don't know how to control their risk, a lot of people go through this entire scenario every time that they trade stocks. Every time. I don't want you to have to go through that. Not at all. So actually, I do have something really cool for you. If you head over to 10minutestocktrader.com, I want to give you a free gift. Totally free. No strings, no credit card, nothing like that. 10minutestocktrader.com. I want you to download my bullish power cheat sheet. That way you're not looking at this. You're actually finding the stocks that I'm looking at, the best, strongest stocks out there. The way to get that is go to 10minutestocktrader.com. Click on the link that says download your bullish power cheat sheet, and then you'll be set up. You're not going to have to stress, and you're not going to be one of these people out there. Hey, everybody, thank you so much for letting me come and join on today's call. Money Mitch in just a minute is going to be running the Spotify call on earnings, and it's probably going to be pretty juicy considering the fact that it's getting monkey hammered after hours. So thank you again. Make sure you smash like, head to 10minutestocktrader.com to get your bullish power cheat sheet. And thank you so much for letting me come on today, Benzinga. I really appreciate it. Hope you guys have a fantastic week, and I will see you here again next week for more backtesting stocks.
This is the How to Trade Stocks and Options podcast, brought to you by 10minutestocktrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money.